All right, welcome everyone. Hope you're having a great day. Let's go ahead and make sure you all can hear me. If you'd please type the number 1 in the chat box, let me know that you can. I would greatly appreciate it. Hey, Jim, good afternoon. Afternoon, Brenda. Morning, Andres. Hey, Alex. Morning, Helen. All right. Yep, I appreciate that, Andrew. That was going on next. Camaria. Oh, okay. So it's on, but I got to open up the little window. The window into my life. All right. I hope everybody's having a great day. What a beautiful day out today. At least it is here. Weather-wise, it is fantastic. We had November weather yesterday and springtime today. It's in the 70s. So as we get started, keep in mind everything we look at is for education. Nothing's meant to be advice or recommendations. If you find something that you like, anything, make sure it fits your own personal risk profile and risk tolerance. Okay. So here's our agenda for today. We'll go through our follow us, today's trades. We'll look at economic reports. We'll take a review of the market. We'll look at future training, weekly topic, which is a good one today, and then your stocks in review. So make sure at the end you've got your candidates ready to feed those to me. And it's not required, but if you say, look at Apple, and this is the reason why, I'm thinking about a credit spread, or I'm thinking about buying a put that's going down, or is it a good switchback trade? If you give me the details, I can tailor my answer more towards that. If you just say Apple, I'll just look at Apple as a technical play and just say what I see. All right, so here's our follow us page. Folks, we are putting out a tremendous amount of content every single day. We just recorded, I want to say, 4 YouTube videos on Thursday of last week and 12 or 15, I don't know, TikTok videos. And those TikToks are short. So they go to Instagram, they go to TikTok, they make it on all the different platforms. All right, today's trades. What trades did you do? Go ahead and drop those trades in there. For myself, let me show you what's going on with me. So I was watching Netflix today. I liked where we were. Yes, we were not at a key level, but I thought if we can get a bit of a bounce today off of that 1100 level, which has a confluence with this negative 136 back here on the fib, man, that may be a great opportunity. And actually, I don't know if, yeah, it's going to force, it won't work. I was going to try to copy, just transfer that line over, but 1097.27. So you know what, let's do this. It won't work there. So let's put it here. And let me change this, 1097.27. 1097.27. Okay. It's got to show on all charts. Okay. Okay. All right, so we go over to the 5-minute. This is the 1097, whatever it was, right? 37, whatever the exact dollar amount of that line was. Here's the 1100. Here, this is a 5-minute candle on Netflix. We closed here. We opened up here, right? If we look at it on a 1, if we look at the 1, we opened up and we ran, right? We hit the high and then we just collapsed. We had no retest. We had no anything. We got down to that fib line, which is where I had that confluence with the 1100 on a daily chart. It is anyway. So then this line, I'm going to take that off of there from now. We came back up and we retested on the 1100. I don't normally take a trade off of the 100-point level. And if the trade would have been a breakout, a retest, and a bounce, then yeah, so we've got the breakout, right? The breakout was there. The breakout happened, right? This is our breakout candle. If you look at the ones again, that was the breakout right there. Where's the retest and bounce? It never happened. It failed, retested, and dropped. I wasn't comfortable in the overall bullish pattern we had going on Netflix to take a bearish trade on it. We've got the room. It's not that we couldn't do it. We've got the room. I just chose to back away and not do it. And lo and behold, if we look at the pattern, it's 5-minute. We dropped from 1100 to a low of, which of course we would not have caught, but a low of 1083, we'll call it. There's a 17-point drop in there, right? And that was in 20 minutes, in 4 candles, 4 5-minute candles. Could we have found a way out of this in here as we bounced? Yeah. So could we have gotten in at 1097 and gotten out around 10, I'll call it 87. I mean, that's a 10-point move in 10, 12, 14 minutes, something like that. But did not work out for me today, right? So I passed on that trade. I didn't take it. Not that it didn't work. I didn't take it. Just wasn't comfortable. If had it been off a fib line, I would have. But coming off of the 100-point level, 1,000-point level in this case, no. Tripp said three very quick scalps this morning on IWM, NVDA, and QQQ for a 25.7%, 31.8%, and 40.5% respectively. Hot damn. Good job, Tripp. Fantastic. And guys, just keep in mind what Tripp's putting in there is being done live in front of the inner circle group, right? Because today was is the trading room, right? So, but they do it a couple days a week. Actually, today no. But yeah, Tripp's doing great, Alex. You got it. Alex said I got off a couple of scalps. Yeah, lots of kudos coming in, Tripp. I got off a couple of scalps on Amazon, 5.4%, and AMD for 8.3% earlier. These days, I'm perfectly happy to get 2 or 3, 5 to 10% scalps for a day. I caught the pop trade on CrowdStrike, but it's currently in the red, so we'll see what happens. Okay, so good job on that. Good job, everybody, with those trades. Guys, we've had decent results, even with the markets the way they've been. Let's see. Let me see where this opens up. All right, so last week, last update on pop, we had a Tesla trade go off well, it was one contract. This is the one contract trade, so $526.50 for our one contract, and that was on the 24th, which was Thursday. So it was the only trade that went off for Thursday. One other trade last week was on the 21st, was AMD. We lost $20 on AMD, right? And then everything from prior to that was from the previous week. So overall, not too shabby. Guys, I want to point something out, a resource that everyone should be taking advantage of. So on tradinglikeaboss.com, you've got Trade with Rob. Some of you heard me talk about it. This is where I put 3 candidates out 2 or 3 days a week. We'll put video out of it. If you're registered for it, you're going to get candidates. Even if I don't do the video, you'll get all the candidate lists from that day. My team sends them out, instantly if we're not putting a video out. So at least you have them that you can look at those yourselves and make the decision. And if you are subscribed, you'll get not only the 3 in the video, you'll get the list of everything else as well. So we're doing Trade with Rob, and then the market starts going wacky, and we get this crazy move to the downside on the S&P. But what's happening? We get a gap on the S&P, or a gap 50 or 80 points to the downside, and all the Trade with Rob trades are gone. They're not there. You can't take advantage of them. So the next day we put another 3 trades in, and the market gaps up 100 points, and no trades at all because everything gaps. So I stopped trading it. I went back and came up with a strategy that I redeveloped from older components back in 99 and 2000 when the markets crashed. 2000, 2008 when the markets crashed. I took some old systems I had and reworked them for what's going on here. And I have what I've now created as a high volatility switchback trade. And I don't know if we put it on YouTube or not. It might be on our YouTube channel. But if you are subscribed over to Trade with Rob, it is definitely in the members area. Let me take a look there. So that high volatility switchback trade, and that's a very short video, the one for the high volatility switchback trade. The regular switchback trade is about an hour long, right? So there's a lot of content in there on how to trade that switchback trade. So I'm just waiting for this to open. All right. So if I go to Trade with Rob, all right. Bonus trainings. Yeah, so we're going to make this, it's going to go out. I want 2 videos up here. I don't want to have it like this, but this is the high volatility switchback one. This is the first one. It's an hour and a half long, an hour and 29:57 long. This one, like I said, was only 10 or 12 minutes. Looks like 7.5 minutes long. All right, but how to trade that high vol for it. So all of that set up to tell you that last week on Trade with Rob, the very first day that I did a video after it releasing the high volatility switchback trade, where's Trade with Rob? The very next day, one trade went off for us. So we get 3 is what I put out there. Usually 1, maybe 2 will go off, but that's it. We're not getting all 3 of them normally to trigger. And I don't need them. I just need a trade to go off. But I've got 3 candidates as potentials there. And the one that went off was Netflix, right? So here's a Netflix trade on 422. We got in at a bullish trade on Netflix at 1017. We get out at 1059 using the high volatility switchback trade. One contract on Netflix netted us over $3,000, right? Woo! Smoking, right? Absolutely smoking. And you can see everything that's happened since then. We had 2 trades on the 23rd. One, we made 288. The other, we lost 108. These I'll do today when I do the video. They were trades for Friday, okay? But we're up almost 23 grand since June of last year. We've taken 95 trades with an average of $241 per trade. So, and of course, the most recent ones are right here. These are the ones that have closed out already. And then there, you'll see there are lines missing. If you start counting 259, 261, that's because that one was not a trade, meaning that one did not go off. So if I unhide that, right, no trade. But this was getting too long having a no in there. So I hid the ones that were no's, trade not taken, right? I hid the ones that were not no's because I just don't need them in here. I don't need to see them. I just want to see the ones that we actually did take. So Alex said, yes, it is on YouTube. And Andrew dropped it in. So there it is, guys. You can go watch that video if you want. Like I said, it's very short. Leave a comment on it. I definitely would appreciate that. But go over and grab the Trade with Rob if you don't have it already. Go to tradinglikeaboss.com or go to tradewithrob.com. And you can get that taken care of. All right. And it is free. Okay, let me go back to a daily chart. And let's go back to the presentation. All right, economic reports. So let's see what we've got going out there today. We're going to go right over to Forex Factory. Okay. So what do we have here? Let's get a drawing tool. So nothing today, right? 10 o'clock. So Monday we've got a 10 o'clock. I don't really care about the 9. S&P Posit. I don't care about that. So Jolts, which is a big report. It's red, so we want to pay close attention. It's 10 o'clock. There's a consumer confidence that could have an effect as well. 8:15, 8:30, they're all pre-market. So unless you're trading futures, it won't affect your trade. It may affect your overnights, but not your when you're entering it today. And then 10 o'clock Corp PCE. So that's going to be a big report. So Wednesday we've got something. And so the market's open. You want to know what's happening. 8:30, yeah, it's pre-market, right? 9:45, yeah, it's okay. It's orange. I don't really care. I don't know if it's going to move the market or not. 10 o'clock, yes, you want to pay attention. PMI, Purchasing Managers Index there. And then Friday, we've got all 8:30, so they're all pre-market. So there's really nothing in there. So bottom line is separate the reports out before 9:30 and after 9:30, Eastern time. Separate the reports out in 2 different baskets. Whatever happens before the market opens will not affect a trade you're getting ready to place today. It's going to move already based on the news, right? What I mean is if a 10 o'clock report comes out and you got into something at 9:40, that 10 o'clock report could move the price of your stock, good or bad. So just know that going into any trade that you take, right? Just make sure you know that going in. All right. Never trade blind, folks. It's no different. I walk on an airplane, literally. The very first thing I do when I get on that plane is I walk in and you turn left or right, depending if it's first class or coach. Whichever direction I go, doesn't matter. I stop right there. If there is a left and a right, I look left, I look right. I want to see where the exits are. I know visually where everything is. I've already seen it. Mentally put a picture in my head. Is there a door across from me? Normally there is on a Delta flight. I know where all the exits are before I get on the plane, right? You always, always, always want to know all the details that are going on. Make sure you know about your economic reports. Don't ever get on the plane without knowing where the exits are. There's my analogy. All right, market review. Let's go take a look because it's interesting what's happening today. All right. Okay, here we go. So, guys, we're getting back up close, and we're near that 764 at this point already. This is a hesitation point. If you forget, what the levels represent when we talk about fibs on there, you've got the 236, which is way down here, and we're going to put H for hesitation, right? The 764, H for hesitation. Now, if you ever did the research, you will find out that this is not the accurate number. 764 is not what belongs there. It's 0.786. Well, then why do you use 764? I like 764 better. Remember, we don't really get there unless we're getting overextended, as if to say the fib is not very accurate any longer, or may not be accurate any longer, because we're getting so back up to where we started the whole move. I changed that over to 764 back in 1997 for myself, because I found a better confluence on what goes on between these levels and what goes on between these levels. Is there much of a difference? Hardly anything. It's hardly noticeable. 64 to 86.22, there's nothing there, right? Is it a deal breaker? Nope, not at all. Right? I like confluence, and mine worked extremely well for it. So we're sitting up at that 764 today. So we gap ever so gingerly today. We run up just shy of that 764, and we fail. We pull back to the 54.73. There is so much going on here today. So much, right? When we run up into the 764, it's not just a line. It's a hesitation level. You have to know what the value of each line represents when you're looking at fibs. You don't just want to go at this and say it's a line. That is not a true statement, right? The most important line on this chart is the 618. The second most important line is the 50. The third most important line, we're going to put 3A and 3B, which is the 236 and the 764. The 382, we're going to give it a 4. Right? The zeros and the ones, they're important. They're there. They have to be there, right? Yes, they're important, but I'm not looking at those levels as my key levels right now. I'm looking at when we made this V top in here, how much of a bounce and a pullback can I get? That's what I want to see. How far up am I going to move? How far back down will I go? Can I get that 2 standard deviation move? We actually, in this last Friday and Saturday, I taught Inner Circle. It was our quarterly meeting. And so we do a full day. We do a half a day on Friday and a half day on Saturday, 4 hours each. And we spent a bunch of time talking about standard deviation and so forth. And the distance between two lines is a standard deviation, right? And just period. It just is. It's one standard deviation from a statistics, I guess, standpoint, from a math standpoint. It's one standard deviation. So it's the expected move. It's where X% of all data points fall within that move. But we went a little bit deeper into other lines, trading strategies, applying or showing where standard deviation actually fits into the trading system that you are developing it properly, and the likes, okay? So you've got to, if you don't know these, make sure you do. And these are not important. Don't worry about this, okay? Just the numbers I put there. And the 3s are hesitation points. Right, the negative 272 is a hesitation point. When stocks get there, they tend to slow down. So my thought this morning was not, oh, we're going to blow through this. No, we ran up into it, and it's all right. I think we're going to back off a little bit, but we've got a major. Well, before we go to the downside, look at the top. We've got the 55 moving average in there. I don't rely heavily on the 55 as a moving average, but if there's a confluence of a fib line, it's got a lot of importance to it. Right, and we have that right now. Are they perfect? No, but they never will be. It's going to be rare when they exactly are both at $252.18. It's a rare find when that happens. Right, but now down below we've got the 54.73, which is this brown line right here. And although it's not a confluence, right below it is the 0.618. So overall, we're in a window right now between the 764 and the 54.73, the brown line. So this window right in here, we'll call that the W, right? That window right in here. And we're inside of that window in there. And we've got to watch and see what's going to happen. Do we break to the downside? If we do, does it even matter? I don't know, because there's so much support here. It's a 618, so it is the most important line of all fib lines. There's an 8 moving average and a 21 moving average, 3 major components at that level. So the 5473 important? Yes. Is it very important compared to the 618? Probably not. The 618 is probably a much more important level, especially with 2 major confluences happening right there, right? We started stair-stepping up. If we look, well, that was our 20% correction right there, but we had a swing low, and then we had a high, right? Well, actually, well, let's do it for this pattern. So we had the low, we had a swing high. We pulled back, we had a higher low, and we had a lower high. We had a lower low, so we start actually trending down now, and we break up above the previous high. So now we're in a reset. Now we're in a reset. Now we're looking at this. We got a high, a higher high. We don't know where this one is yet, right? But from here, let me draw it out because it'll be easier to see. So here we have a low and a higher low. Here we have a high and what is now a higher high. Now we can't draw a line on today's high. Number one, the day's not over. Number two, the day's not over, right? You can't use an intraday candle to define a high, right? You got to wait for that to run out first before you can do that. So that candle, when I say run out, the day's got to be over, right? But it looks like we might be getting that upward momentum type pattern. Now, if, and this is a big if, I don't know the answer yet, but if these lines, if this aligns here, and we draw a parallel line to come off of that wick, that's where we're expecting that line to be within. Now, once again, we're going to use fib math. We're going to split this in half-ish, and look where that midpoint is right now. And the midpoint, for those of you, if you're unfamiliar with what I'm doing there, folks, you're getting the midpoint between the 2 diagonal trend lines. This one in here, this blue line right here, this is our midpoint, right? That line there. And you can see that we're sitting on it right now. So, and we're kind of, our thing of your shoulder, the shoulder is just kind of sliding off of it every single day. We're just rubbing into that right there. We got to break out of it. And all of this is coming to a head right at the 764 hesitation and the 55 EMA. They're all right on top of each other. Lots of strength there, a lot to break through. And then this on top of it gives us just a little bit more added pressure in that place. Okay, I see your question there, Gwen. Just let me finish up on S&P and I will. I'll answer it. And if I don't, just throw another message in so that I see the text move and I'll remember to go back and look. Inverse head and shoulders is what you're referring to on SPX. So, I mean, yeah, it could be. Jim, if we're looking at this as the upside down on the inverted head, here's the shoulder, that's the armpit in there, that little curve, right? This one here, yeah, I guess. I would prefer it a little bit higher, but yeah. Oh, shoulder on the right side. Sorry, no, I'm just, again, analogy, right? Just think of the stock is dragging, or the S&P is dragging itself along that line. Think of it as being a wall, and it's kind of pushing up higher on the wall, just dragging along. No, I didn't mean the shoulder of that. Good thought though, Jim. I was just trying to play cutesy with it, if that's possible. Okay, if we look at the bigger time frames, let's go look at a weekly chart. All right, so go back here, daily. I got to get rid of those 3 lines. Okay, so we redrew the weekly chart not long ago, and looks like we're going to wind up having to redraw it yet again. So we're sitting right at the 764, just as our daily chart is. You know, as you could see, for multiple weeks in a row, we just had, you know, a thrashing. And when we look at the monthly chart, the monthly candles, overall, we've had great moves. Look at this last month. Look at the month of April. I mean, that has been we went from a high of, we'll call it 5,700, not quite, but we'll call it 5,700 to a low of, call it 4,800 again, just make it easy math. So 4,800, 5,700, 900 point move on the S&P for the month. I mean, it's just crazy, crazy how much we've dropped, how much we had dropped. And we're getting back, which is good, right? But overall, even from the bearish, from the longest time frame, we shifted down into a bullish neutral bias right now. We did get down to neutral somewhere along that month before bouncing back. The weekly tells us that we're in a bearish bias, and today's setup was absolutely perfect, right? And we go back to a daily chart, the shorter time frame, we're still in a neutral bias right now where we could easily be, bearish down below the 8 or bullish up above the 55. Either one is that far away. It is not a big stretch, a big reach to actually make it to that level. So it is definitely something worth keeping your eye on, right? But we are, there we go. We are in a position right now that you've got to have some caution. I don't trust what's going on just yet with government, with markets. I don't believe that we have a clear signal that yes, things are going to be okay. Today, it looks like the Russia-Ukraine deal is going to get done. It looks like the Middle East, Iraq, Iran, looks like that's all going to get taken care of. These are great. Looks like are nice. We need definitives. The deal is resolved with Hamas. The Ukraine-Russia war is over. We need definitives to get back to having true directional movement, and I just don't see it right now. And then there's a lot of other tariffs and everything else that's out there, right? Remember, just be very clear on something. Whether you like whoever the president is or whoever your leaders are, president, governor, whoever it is, it doesn't matter. They're going to make the laws they're going to make. You vote, you get to, you get your voice heard, right, wrong, or indifferent. It's the system we have to live with, right? But now, if you don't like the president, you don't like what they're doing, that's fine. I have no problem with that. Does that mean you have a problem with making money on that? You shouldn't. Go make the darn money. If tariffs are driving markets down, play the downside. Buy puts. There's plenty of opportunity to make money in that kind of market, right? If I mentioned this probably 6 months ago, 4 months ago, that Kathy Woods came out, right, from ARK, and for investing, and she came out and said Tesla, she put its price target of Tesla of $2,900 a share, 2,900, whatever the number was, I forget, but it was up there, it was over $2,000, and she explained it as because he is creating self-autonomous cars, they're going to get rid of all Uber drivers. Tesla's going to provide all the vehicles. He's going to give all the cars to Uber, and they're going to split the profits, however the profit split is. But Tesla's going to make some money off it, right? Elon Musk is going to make, whoever's making the money, whether it's Tesla, a new company, whatever it is, okay? Maybe it's Uber X. Who knows? If you take Ubers, you know what I'm talking about there. You've heard that phrase before. So that's Kathy Wood a few months ago, right? Now we've had all this Doge, and we hate Tesla, we hate Elon Musk stuff, and the price of Tesla's gone down. Maybe some of it justifiable because he's not paying attention to his own store while he's focusing on the US government. I want to say it was Friday, because I talked about this Saturday, I think it was. It was either Friday or Saturday that I talked about it in our inner circle. Oh goodness, on the Shark Tank, Damon, what's his last name? The clothing guy. Anyway, I saw a video of his where he said, no matter who you like, whether you like him or not, Damon John, thank you. Brenda, thank you. No, whether you like him or not, hate him or not, doesn't matter. If you want to make money right now in the stock market, you need to buy Tesla. He said Tesla was over $400. Now it's at $250. So that was before Friday, because we moved up to 60 something on Friday. He said you need to buy Tesla with the autonomous cars and Uber and blah, 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 and it's going to be worth so much money. So here he's ringing in Some of the same things that Kathy Wood did from a long time ago. Massive following, Damon, massive following, right? Did it help Tesla or her? I have no idea. But my point is, if you don't like him, that's okay. If you don't like his position, what he does, that's okay. Right? But does that mean you don't want to make money off him? They have nothing to do with each other. They're not mutually exclusive. I don't care if I like someone or not. I'm going to make money off them. One time in my life, I chose not to do that on one company. I hated Disney. I hated their management. I walked around calling them dismal for years. I would not trade them. And then something bad came out, and I'm like, why would I not make money off of this? I'm insane. Why would I not take the money? And it was easy money. It was just bad news. You knew it was going down. Take the damn trade. Take the trade. Am I telling you should trade Tesla? No, I'm telling you there's news out about Tesla. You decide what to do or not. All right? You decide what to do. But after he did that video, this is what happened on Friday. Right? So I don't know. We'll see. I trade Apple to the downside only. There you go. Brendan said, I saw the weirdest thing on Tennis Channel. There was a power outage in Spain, Portugal, and France at the same time. Strange. Yeah, maybe. Strange. All right. So Gwen said, Rob, I have a question regarding entries using stock price versus using strike price on the option chain. When you use the stock price, you don't consider delta theoretical value or the bid-ask spread. How can this work? So let's go and take an easy stock like an AMD. Okay. So Gwen, if I were going to take a bullish entry on AMD, pretend for now it's, we're in the right spot. Life is good. We're going to take a bullish entry. Right? Let me just make it bigger. Right? And my entry, let's say my entry is 90 and a half. Let's say that's where I wind up getting into this trade. 90 and a half. Okay? Bingo. So I'm in the trade. So now what? Now I need to set a target and a GTC. Well, I could set my, so if I buy the option, just spacing out there. So if I buy to open the $92 call, and let's say the $92 call is trading at $5. I'm just making it up, right? I don't know what it's trading for right now. And that would be for this week. It's trading at $92. It's a $5 call. Okay? Is our cost in that position. When we get, if you're trying to put in a target, let's go a step further. I'll help you out here. Okay? Let's say we know the delta is a 70. Right? So now, Gwen, when the stock makes it, and pretend there's no 100-point level here. We got $101 is what our resistance is, right? 101. Right? When the stock makes it up here, let's say you want to get out when the stock gets to 100. Right? When the stock gets from wherever it is now, 94.76 up to 100, the stock has gone up 95 to 100, we'll call it $5. So it's gone up $5. We could take the 70 delta, multiply it by $5 move, and it says $3.50. You could subtract whatever the bid-ask spread is, right? And it comes out to be $3 is what your option is going to be worth when the stock gets up here. And all of that is a guess, Gwen. And it's a guess based on what? It's a guess based on, did the delta change? Gamma is there. Gamma is rate of change of delta. How much did that affect it? Did gamma stay steady? If we saw that we had a 10 gamma and then an 8 gamma and a 12 gamma, did that number hold steady as we moved up through $5 moves, which is at $1 strike prices, is 5 different gamma changes, right? Did the bid-ask spread, it was only 20 cents when we got in, but now it's 70 cents when we're getting out. What's the volatility on the position? Well, we had a vol on the option of 26, but now it's at 41. So all of these things affecting it, you don't know what price to set it at. You could say, well, I'm just going to try for a $3 profit, but maybe you're out of the stock when it gets to 98. Maybe you're out of your option rather when the stock gets to 98. So you left a lot of upside on that trade. All right. First thing is, Gwen, in particular, does this make sense to you? Do you understand what I'm saying so far? One for yes, two for no. Okay, let's see. She wrote something in there. Yes, I get that. I guess, but I'm talking about the entry price as the stock. Okay, so it's not a. It's when the stock gets to that level. So what you could do is you could put in a trigger order that's a contingent order that says buy the $92 call when the stock gets to 90 and a half, and you're buying it at market, whatever the price is, you're buying at market. Yes, you're dealing with a bid-ask spread that you cannot negotiate. You're dealing with a market maker going, oh, market order, can I take advantage of? Yeah, you're dealing with all of that. Yes. But this is my way to get into that trade and maximize the movement on it and not have to be sitting there when all of this happens. Does that help it, Gwen? Excellent. Good. Yes. Okay. Good. Good. Anybody else? Any questions? Give me a 1 for yes, a 2 for no, if that was helpful. Good. 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 Hey, Barry. Good to see you. Okay. So Alex typed in, as a rookie trader during those weeks, the SPX as clearly bearish, I did really well, both before and since, though it's been tough to use the SPX as a compass when it's either gapping or lurching around, or it's clinging to a fib line for dear life for most of the day. It'd be great if it picked a direction and stuck with it for more than 10 to 15 minutes at a time. Yes, that would be wonderful, but then they wouldn't call it trading, they'd call it winning, Alex. Right? It's what we've got to contend with as traders. It's absolutely what we have to contend with as traders. And this is, without going into the details, inner circle, guys, masterminds. Our masterminds, our inner circles, it's our highest level coaching that we have. This is where we dig into stuff, even something I taught this weekend. I said, I'm going to show you this. I'm not talking to you guys about what it was, but I'm going to show you this. And I said, and if any of you ever ask me in public, Rob, do you remember when you taught us this? I would tell you that you're lying. I never taught you that. Right? Because for some that are newer traders, you're going to hear what I said there and go, oh, he just gave me permission to do whatever I want. And that's not what I did. It is not a strategy for someone that is a brand new trader, right? So I don't teach those types of techniques in general meetings like this. In our inner circle, in our mastermind, oh yeah, we teach in depth. I mean, there's a Fibonacci trade called the 3X trade. You guys haven't even heard of it. I taught it now 3 months ago to our inner circle. Right? It's a great trade setup. Right? You haven't even heard about it. Probably won't for another 6 or 8 months at least. Right? Inner circle gets everything first. Right? They're also the best traders we have. So when I look at people to test it out, and here, you got Roman in here, you got Tripp in here. Let's see, who else? Amelia, of course, but of course. Mike is in here. Yeah, there's a lot. I just can't read them all. Yeah, there you go, Glenn. You work your way into it. That's good. That's excellent. Absolutely. I am fully with you, Gwen. 1,000,000%. I'm looking forward to joining the ranks one day. You got it, Alex. We'd love to have you. So, but when we look at the trades, guys, and the entries and the exits, I like to use the price of the stock versus the option. Does that preclude you from using the option? Nope. If you're sitting there like this, waiting to get out of the trade, you don't need to worry about using the stock. When the stock gets to where you want and it rolls over, hit exit. That's it. You're done. You're done. You're done. Okay? Done, 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 done. All right, let me go back into the presentation and what do we got coming up, guys? So Inner Circle tonight is our check-in. Mastermind group tomorrow night. Monster Market Movers is on April 30th. I'm looking forward to that one. Power option plays is coming up on May 1st. That's core training. So for those of you that are in POP, you'll automatically be registered. That is our second of what will probably be 3 nights, 3 evenings of 2 hours. It's 2 hours, planned for 2 hours anyway. Of core training on directional trading, and then Power Hour Trading Coaches Playbook on regular schedule. Trading Blueprints is Tony, folks. Andrew, can you drop a link to that in there, guys? I watched one of Tony's classes. He is smoking with this. You got to get in there, right? Check it out. It's a free training he's doing. And then Pop Covered Call, email you all on regular schedule with you. All right. And here is our weekly training topic. Da, 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 drum roll, please. How to thrive when the markets go wild. All right. And it's a little bit with tongue in cheek when I talk about this. Okay. Thriving in this would be you're doing amazing, right? And are there ways to do amazing in markets like this? You can. There are times that'll happen. But I want you to look at one thing a little bit differently. Let's not worry about the word thrive for right now. Let's worry about survive. Okay? Because this is no different. If you're a business owner, you'll get this immediately. This is no different when business gets tough. You don't go out of business because business gets tough. You get through it. You make adjustments, right? You make some cutbacks, right? You don't spend as much money on these certain things. You used to go on all these business trips and conferences. You go on less, if any at all, right? You cut back on that travel to keep some money in the business, right? When I was in manufacturing, we did it all the time. It would happen every couple of years. Markets would be off. It was construction industry. Construction would be off. We had to cut back, less travel for people. The purchasing manager yelling at you if you wanted paper clips, right? Her answer was, you should never have to buy paper clips again. You bought them once. They're reusable. Why do you need them again, right? So if you can survive in business through bad markets, that's where the growth spurt happens when the markets, your business, when your industry starts to come back. That's your growth spurt. And it's no different here. You will thrive if you can survive, but you have to make it through this, which means multiple things. It's not just your account is holding well. For some, it's the mental fortitude of, I just can't take the beating up. I can't take the whipsaw. I wish I had the video, the commercial. It was from a brokerage firm, and I don't remember which one. And it was many, many, many years ago. And there's a guy sitting at his computer and he's trading. And the camera is watching him sideways. So his monitor is in front of him. He's sitting like I am here. The camera's catching him from the side here, right? And every time the market moves on the screen, he's like, and he jumps out the window, which was a ground floor window. Like he literally, the window was at ground level. Just, he was right there. Right. And the postal worker, the mail carrier is walking by with the mail cart, like, right, driving himself nuts. Every little move on the screen, and it's probably 12 cents the market's going up and down. Right. You've got to be able to deal with the whipsaws, and you've got to be able to put together a system for yourself of what you're doing. Right. I'll give you this from what we did over the weekend. The rules of what I teach in channeling options. So if you're inside of if you have access to the Fibonacci trainings that I did, the Fibonacci series, that was like 20 plus hours long. If you have access to that, go in there and watch the channeling options component that I did in there, right? That's where that standard deviation stuff starts stepping in. And right now we're seeing a lot of opportunity in that, in this type of market, because of how we respect the Fibonacci levels, which is what those channels are. They're fibs. After that first one is drawn, everything else off fib. The other 4 channels are fibs. 1 and 2 standard deviations, realistically, right? But if you can get really good at a strategy, whether it is channeling options, directional trades, covered calls, I don't care. I don't care what the strategy is. But you've got to get really good at focusing on that strategy in this market, and how do you adjust your rules to work right now? Which means you've got to do some things differently. You've got to document it. One of the things that I'm really good at is keeping track of the little minute changes that I made to make the trade better. Or worse. They don't always get better. There are many times they get worse. But that's why you keep adjusting that system until you get it right. Jim said, not being reported much, but India and Pakistan are starting to fight. Going to keep an eye on this as well. So I have a meeting. One of my guys lives in India. I have a meeting right after this. We get the right from someone that lives there, from his opinion, right? But yeah, but there's so much of it out there, Jim, right? It doesn't matter. We are not. Yeah, I may annoy some people with this, but I'm going to say it anyway. We are not in a very respectful place any longer. I do not find a lot of people out there, the way they drive, the way they talk, the way they act around other people, the way they throw garbage around outside. And I mean, I was in Costco yesterday, right? And the guy is finished with his cart and he pushed it across the park. It's an active parking lot. If you guys ever go to the Oceanside Costco, it ain't like that the place where cars are driving to get in and out is light traffic. And he just pushed his cart out, left it in the middle of the street and drove away. I mean, what? What? People are very disrespectful, right? I find lately, right? From COVID is when I see a difference in it. I think people are very disrespectful right now. I think markets are not the same. Business is not the same. Bosses are not the same. Employees are not the same. There's a lot of things have changed. We've got to find a way in the stock market to have a foundation where we can get back to something that's normal for us, right? And you can't let all of these outside powers of Pakistan and India, Russia and Ukraine, all of that, you can't let that dictate whether you're going to trade or not. Guys, I'm going to trade the rest of my life. To the day I die, I'm going to trade. My neighbor across the street asked me, when are you going to retire? He was just forced into retirement. He maxed out, he aged out in the fire department. He was a fire chief. And he aged out in the fire department. He said, when are you going to retire? I said, retire from what? He said, from your business. I said, why do I want to do that? So my business is self-managed. You know, I don't run it. Other people do. I look at what's going on. I give some direction, and other people take care of the day-to-day. I don't have to manage any of that stuff. He goes, what about the stock market? You're in that every day. I said, why would I stop? Up here is awesome. It keeps me going up here, right? It keeps me ticking away. Yeah, our friends don't trust and our enemies don't fear us. Yeah, we're just in a much different place right now, and we need to get some order back into the markets. Is Trump the guy to do it? I don't know, guys. I hope so. Right? But we got to do something. We have to do something right now. And for you to thrive, you need to survive. So right now, I want you to find the one system that you can rely on. And if you don't have one, then start to develop it. Start to develop it. When you get into Trading You, there's plenty of stuff in there about building systems, as is Mastermind Group and Inner Circle, right? If you are in any of those, or if you're in Mastermind or Inner Circle, you can get on with your mentor and start building out a system for yourself, right? On one-on-ones. But you need to start laying out and documenting. Follow along with what I do in Pop. Follow along with what Trip does on Covered Call Explorer. Follow along what Tony does in Trade Watch Alerts. Follow along exactly what's happening and build that system out as yours and trade it exactly like it's supposed to be, just like it's done. And then, and only then, do you start making it yours. Guys, that's the only way I'm going to get you there. You've got to get through this market right now. You will find there will be we see a large percentage of people stop trading, stop paying for education when the markets are like this, right? And there's an old advertising or marketing adage that goes, when business is bad, advertise more. When the market's bad, don't do less. Don't do less education. Do more. You need to dig in, right? This is the time to learn right now. Gwen said, me too. Now I've committed to trading for the rest of my life. I started in 2013 with those two guys who closed out their business and sent me over to you. I couldn't get steady wins with them, but I love your teacher at heart. I'm here. Well, Gwen, I appreciate that. And listen, I know those guys, that they're great guys. they had very basic concepts of what they taught, and I think they did a good job of bringing people to the market. Roman, are you still here with us today? Yeah, Roman came from the same place. And Roman is in the room with us now. And Roman, you can chime in if you want. You want to type something on what I'm going to say. But Roman he'll tell you, guys, he was for years trying to make it and could not, and came over to us, and Roman has done phenomenal since. Right? Roman's a guy that walks on and says, follow Rob's rules. If you ever see him at an event, that's him. Follow Rob's rules. He says it in here all the time too. Right? Best school in America. I appreciate it, Roman. Gwen said, funny, this is the time that I am making money. Over the last month, I have had mostly wins. Well, Gwen, then your system may work extremely well on chaos, and that's okay. That's okay. Your personality may fit chaos. That's okay. Right? Yeah, and I don't mean it as funny, haha, right? But I don't mean it as funny. I'm serious. It just, the way you trade, whatever your system is, power option plays. Look, guys, we have not ever done the results that we have right now and by this time of the year. Ever. And I got pop is going now for like 2014 or something. All right. So we've got $5,265 open, $609,492 closed P&L for the year. Closed by the end of April. That's the end of June's number. We already have, through the mid-year, half of our profit already for the year is there. And half based on old numbers. I lowered our profit projections to $1 million a year for this, not $1.2 million any longer. It's no longer $100,000 a month. It's $1 million for the year, which is just about 80 grand a month. With 10 contracts, 8 grand a month with one. And already in our one contract trades, we're at $66,000. Right? Why? This crazy market, Gwen, has been amazing for us. Because my system is built on fast move. Make the decision. If you are I love this. You guys have seen it, the whack-a-mole, right? When the thing pops up and you got to hit it, right? And I love there's one with a dog now where they put a hot dog through the bottom and they keep moving it around and the dog is trying to get the hot dog. But if that thing pops up and you sit there and go, what should I do? Oh, maybe I should. It's gone already, right? My systems in pop are designed to be taken. They're not designed to be thought about. They're designed for fast-moving trades. When we get these markets, this year has been amazing for us. I hope it stays just like this for me. I hope it stays just like this. This is a great year for us, right? Gwen said, I am much more steady with pop. I love it. Okay, good. That is fantastic. All right. Last are your candidates, guys, your stocks. What do you want to take a look at? Drop them in. Remember, this is your section, not mine. Whatever stocks you want to look at, I will go right up until 12 o'clock. Man, I have not looked at that one, Alex, in a while. I'm glad you put it in. Roku. Interested to see what it's moving right now. All right, well, that didn't work well. But let me do this. Let me go over to all symbols. Roku. All right. Ooh, the Magro. Okay. Very old fib on there, of course. Let's do this. Let me get rid of some of entry, stop, GTC, blah, blah, blah. Okay. So I'm going to back this out of the way. I mean, I can see where the fib belongs easily. Here to here. Is that too big? I don't know. We'll see. Let's see. 66 to 75 is $9. 88. Yeah, we probably should split these levels in half. So let's go add a negative 136. We definitely need a 118. We definitely need the 136, but we'll also add the 118. All right. So Alex, we are right now in a neutral bias But we do have a ping pong opportunity here, Alex, and that the ping pong is when we can move between these two fib lines, even though we're in a neutral bias, right? So 66 up to 71, you got a $5 opportunity there. We've got $8.80 is our fib, which means $4.50 is our wildest average true range. 4.5 versus 5, we are spot on there, Alex. So if I can get a close here, retest and a bounce, I'm looking at 71 as resistance. I'd probably be out at 70 on this one, Alex, on the upside. But I like it a lot. All right. I hope that helps. Henry's asking for big airplane, Boeing. Figured I don't really have any new on this because I don't really trade it any longer. Yeah, and you can see why. So I would draw the fib from here to here, but it's already old. It's already over. So, yep, I'll come off of that swing high. And we've already broken through the 882, which is here. So although it's the fib, we don't have anything else right now. Let's go back and look further here. Okay, so let's pull this one back. Nope. The whole thing. Let's undo that. Try it one more time. Let's come from this swing low up to this swing high here. So at least I've got an older one to work off of at this point, right? So I can get some numbers there. So 171 to 184, that's 13, 16. I don't need to fib it in there. We're fine. So, I mean, I'm not a fan of it, Henry, because I can't get a good fib at this point. But if you break the 185 retest and bounce, 195 is resistance. But I just don't like it because I don't have a new fib that I can draw yet. This one is wiped out. And the other one was just really old. Alex said, I'm interested since it's a former pop stock, why we swapped it out for something else. It wasn't moving at that time, Alex. That's exactly what it is. We look at numbers. It's all numbers based. Every bit of it is numbers based. So, yeah, let me see. Yeah, I can't grab them that quick, Alex. It's getting to the end of the day here. But if I go back and look at the old, my pop, Alex, go back and look at the pop tracking sheets, right? You got your last document. Go look at the end of the document, and all the extra pages that are in there are the results from last year. You'll see how everything did, right? And you can even see the ones that we pulled out, and you'll see how they had done. And usually we get down that last, the lowest or the second lowest, those last one or two of our results of total P&L. Those are usually the ones that have 1% of our whole P&L, less than 1% of P&L came from there. We swap it out for another company. And it's always trying to find a better mousetrap, right? Is what we're doing. You're welcome, Alex. Gwen's asking for CVX. Oh boy. A lot of concerns. Middle East, right? Oil prices. I know that's one of the things Trump was talking about. Okay, so the good and the bad is this one. When it comes to oil right now, we've got to watch the news and see what's going on as far as what is OPEC going to do and some of that. Chevron is its own entity. And OPEC will have an effect on it, but Chevron still can have good news or bad news come out about it that will go against what the earnings are. And Jim said, by the way, earnings this week on Chevron. So keep that in mind. So right now, I like it, and it's right here, it looks like. I like this better to the downside because if we broke above, retest, and bounce, I got the 21 right in the middle there. So that's the obstacle in the obstacle course. I can't really get through it. Get down below the 8, we could, but we're still a little far away, I think, of our 8 and of our fib and our moving average. Let's see. So we're more than 25% away, whatever the distance between the 236 and 0 is, Gwen, from that 132 to 141, we'll call it. So $9. right? This is more than 25% of that $9 away at 138.34. Okay. So it's a tough trade entry to me because of that. I would not take the trade. This would be a next for me, Gwen. I would pass on this one, right? Based on that. Get me up above the 382. Get me down below the 8. Yeah, even get me down below the 8. You know, ideally, I would rather actually see us pop a little bit and then fail so the 8 moving average can come up a little. And then I would look for the bearish entries. All right. Wonderful. All right, folks. Looks like we are at the end of our time. Look, Andrew dropped a whole bunch of links in for y'all to grab. So we'll leave the room open a couple of minutes. Take advantage of that. Click on those links. Just get in everything you can, folks. Just dig in and learn everything you possibly can. Find out what it is you like the most, and then put your biggest emphasis and focus on those. All right? Have a great rest of your day. God bless. I will see you all in our next update, everybody. We'll see you soon. Bye.